Across the global financial ecosystem, traditional credit markets are locked in a structural gridlock. Central bank tightening, rising default rates on commercial debt, and rigid lending criteria have choked off liquidity for high-value enterprise operators. While retail borrowers face endless rejections from traditional banking committees, high-ticket solopreneurs are deploying the liquidity grid. Welcome to the engineering framework that bypasses institutional credit freezes by routing capital through peer-to-peer cryptographic liquidity networks. The core failure of the conventional credit system is its dependence on centralized intermediaries. When commercial banks control capital allocation, they impose arbitrary lending caps, invasive compliance reviews, and exorbitant interest spreads that drain enterprise cash flow. Relying on legacy financial institutions for operational liquidity introduces an unacceptable vulnerability that can paralyze your business overnight. To achieve absolute financial independence, we replace institutional gatekeepers with algorithmic peer-to-peer credit pools. These autonomous smart contracts connect capital allocators directly with verified enterprise operators. By removing human underwriters and bureaucratic loan committees, liquidity flows freely based on mathematical solvency rather than subjective corporate policies. Counterparty risk is eliminated entirely through cryptographic over-collateralization and multi-signature security vaults. Within the liquidity grid, loans are never issued on trust or institutional goodwill. Every credit line is backed by mathematically verified hard assets and autonomous liquidation parameters, ensuring your treasury remains completely insulated from macroeconomic contagion. Capital velocity dictates enterprise survival. While traditional commercial lenders take 30 to 90 days to evaluate, approve, and disburse corporate loans, decentralized credit protocols execute capital routing atomically in seconds. Settlement friction is reduced by 99%, allowing your business to seize high-value market opportunities with unprecedented speed. Persistent inflation and volatile interest rate hikes continue to punish businesses trapped in variable-rate commercial debt. The liquidity grid utilizes decentralized Oracle feeds to anchor corporate credit lines to stable, transparent algorithmic interest rate models. Your enterprise avoids the predatory spikes engineered by central banking monetary policies. Manual debt management and treasury balancing introduce human error and administrative drag. That is why elite operators integrate autonomous AI execution agents directly into their liquidity stacks. These synthetic managers monitor debt-to-collateral ratios, liquidation thresholds, and yield variances on an ongoing loop, optimizing capital efficiency without human intervention. Geographic borders represent a permanent bottleneck for traditional corporate expansion. Local banking regulations and international wire restrictions slow cross-border capital movement to a crawl. The liquidity grid operates entirely on global cryptographic rails, enabling instant cross-border settlement and multi-jurisdictional capital allocation without touching a legacy commercial bank. Every intermediary in the legacy lending chain, from commercial brokers to correspondent banks, extracts a permanent toll on your operational revenue. By replacing bureaucratic middlemen with immutable smart contracts, your net margin retention on credit financing expands past 95%, turning an expensive liability into a streamlined capital asset. We have exposed the severe systemic risks of traditional credit markets and established the foundational architecture of the liquidity grid. But structuring peer-to-peer liquidity is only the initial phase. In the next block, we will deploy the advanced software stack required to automate your credit protocols. Stand by for Part 2. To construct a bulletproof peer-to-peer credit infrastructure, your smart contract codebase must undergo rigorous formal verification. High-ticket solopreneurs deploy advanced development frameworks like Hardhat and Foundry, integrating automated testing suites to ensure that debt liquidation algorithms, collateral ratios, and interest accrual logic remain entirely infallible under extreme market volatility. Traditional corporate lending requires weeks of invasive financial background checks, tax audits, and subjective committee reviews. Within the liquidity grid, cryptographic proof replaces institutional friction. Zero-knowledge protocols verify your enterprise solvency instantly, securing high-value credit lines while maintaining absolute privacy from corporate surveillance databases. Let us analyze the mathematical expansion of capital velocity inside a peer-to-peer credit network. When you eliminate banking spreads, origination fees, and administrative delays, your cost of capital drops significantly. While traditional enterprises struggle with 10% commercial loan rates, sovereign operators access decentralized liquidity at fractional spreads, maximizing net operating margins. Counterparty risk management is the core pillar of long-term solvency. Storing corporate reserves or sourcing debt within centralized financial platforms that can alter terms or freeze withdrawals during a market crash is an unacceptable hazard. The liquidity grid relies entirely on self-executing smart contracts, ensuring your collateral and credit channels remain under your direct cryptographic control. A peer-to-peer credit line does more than provide emergency funding, it serves as an active capital multiplier. Because your liquidity streams are integrated directly into decentralized money markets, you can dynamically deploy capital across high-yield opportunities on every single block, generating continuous operational revenue without banking friction. Geographic rigidity is a fatal flaw for conventional corporate financing. If regional banking regulations or domestic capital controls tighten, moving traditional debt structures is practically impossible. The liquidity grid decouples your credit lines from geography, allowing you to route liquidity across global validation nodes and adjust your operational footprint instantly. As central banks continue expanding fiat currency supplies, traditional corporate debt structures become systemic traps. The liquidity grid anchors your enterprise credit to productive cryptographic assets and algorithmic stability, providing absolute immunity against currency debasement and soaring inflation shocks. Deploying this infrastructure permanently elevates your professional posture. You stop functioning as an exhausted executive negotiating with rigid commercial lenders. You operate purely as a system architect, managing decentralized credit protocols and optimizing capital allocation while your automated tech stack handles background execution. We have successfully mapped the transition from traditional credit gridlock to sovereign peer-to-peer liquidity networks. You understand the smart contract architecture, the risk mitigation mechanics, and the elimination of banking intermediaries. But maximizing this framework requires our final operational sequence and master toolstack deployment. In the final block of this masterclass, we will assemble the complete software ecosystem, analyze the long-term compounding advantages of decentralized credit, and deliver the definitive closing action plan. Stand by for Part 3 as we finalize your permanent escape from the legacy banking matrix. To operationalize the liquidity grid, you do not require a commercial banking relationship or an institutional credit committee. You only need a precision-engineered technology stack. Hardhat and Foundry manage your smart contract compilation. Chainlink provides decentralized Oracle price feeds for real-time risk assessment, and multi-signature vaults execute absolute self-custody over your credit channels on an unyielding loop. Examine the 12-month compounding projection of a sovereign enterprise utilizing peer-to-peer credit networks. While traditional businesses remain trapped by commercial banking credit freezes, restrictive lending caps, and high interest rates, solopreneurs utilizing decentralized liquidity scale their operations with near-zero friction. Your capital compounds exponentially, accelerating your timeline to absolute financial independence. The legacy commercial banking model is mathematically and operationally obsolete. Trading your finite time and enterprise energy for heavily restricted, centralized credit bound by traditional banking rules is a high-risk gamble. True economic security belongs exclusively to the system architect who owns the underlying code and the direct peer-to-peer liquidity architecture. Remember the ultimate objective of this architecture: reclaiming your time. Capital is merely stored human energy. By replacing bureaucratic loan officers and commercial intermediaries with automated smart contracts, you remove administrative friction from your existence, securing the rarest luxury of the modern digital era: absolute personal autonomy. While traditional corporate operators remain bogged down by credit application delays, interest rate volatility, and banking red tape, you operate with unmatched velocity. Your liquidity grid architecture allows you to reallocate, scale, and optimize your capital channels globally within minutes, entirely bypassing legacy market gridlock. You no longer require validation from the legacy banking matrix. You do not need commercial credit approval to command a high-performance enterprise. When your smart contracts execute autonomously in the cloud to secure unassailable liquidity on autopilot, your on-chain ledger becomes your permanent proof of sovereignty. The blueprint for the liquidity grid has been completely revealed. You possess the structural framework, the code stack, and the cryptographic shields. The illusion of safety inside the legacy banking trap is officially broken. Subscribe to this channel, activate your notifications, and write GRID in the comments below to lock in your execution matrix. We have engineered the ultimate framework for modern asset sovereignty. From exposing traditional credit gridlocks and constructing peer-to-peer liquidity pools to bypassing commercial lenders entirely, you now hold the complete master plan to decouple your enterprise financing from centralized manipulation permanently. Yet, as your sovereign portfolio scales and your on-chain capital channels expand, you will encounter an advanced macroeconomic landscape defined by cross-border routing rules, multi-jurisdictional residency shifts, and the evolution from a digital solopreneur into a global asset allocator. The pursuit of absolute independence never halts. To ensure your digital infrastructure remains impenetrable before the next major systemic shift occurs, you must master our foundational automation layer. Click on the video appearing on your screen right now, where we break down the exact operational scripts to scale your sovereign enterprise.